You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's that time. It is time for TWIFO. This Week in Futures Options, the program where we do it all. We break down the week that was and indeed still is. From a futures, options, trades, and trends, and volatility, and skew, and unusual activity, all sorts of fun, different perspectives. And today is a very special episode, listeners. Very special episode of Blossom this week, because it is our final TWIFO for the mad year that was 2021. So we're going to take a very special look back at what were the biggest movers and shakers of the year, what was lighting it up, what were the big changes from a vol perspective and everything else like that. Probably some surprises lurking therein. So we're going to dive right into it. I'm excited to do it one final time here for 2021. So let's kick it off the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers Report, the portion of the show where we break down the big movers to the upside, aka the light side, and to the dark side over there at CME this week. Going to kick things off the way we always do, breaking down this final week of the year here. Then we're going to go a little bit farther afield to get to what I know a lot of you have been waiting for, the movers and shakers for the year. Of course, you guys know where to go to find most of our reports, not this one, unfortunately. This is a special report. You can only get it if you're on the premium side of the Quick Strike, or if you're fortunate enough to follow us or CME Group. We tweeted out right before showtime. this week, giving you a special report to sink your teeth into the movers and shakers for the year. So check that one out if you're not following us. First off, why not? At Options on most of your major social media platforms. Then you can get access to that report and a whole bunch else. And of course, if you want to follow along with everything else we do on the show, cmegroup.com/TWIFO, TWIFO, or /TWIO. Let's kick it off here. To end the year, listeners, we got a lot of green back on the screen here. There is enough to make a bottom 5 for the dark side this week. You can probably do a bottom 10 if you really stretched it. But we'll start there because I like to start to the dark side, listeners. Number 5 this week, corn, off 1.86%. Number 4, pretty much Ags bonanza to the dark side this week, listeners. Oats, number 4, off 3.11%. It was number 5 in the same direction last week, off 1.37%. Number 3, SRW wheat, so Chicago wheat, off 4.14%. It was number 3 in the other direction last week, up 5.65%. Number 2, KC wheat, off 5.57%. It was number 2 in the other direction last week as well, up 6.5%. And number 1 to the dark side this week is Bitcoin, off 6.86%, taking another break after flirting with the 50K handle yet again. Now we go to the upside here. Let's go to number 5. We've got rough rice, up 3.2%. Number 4, RBOB, up 3.77%. Number 3, our old friend WTI, up 4.16%. Number 2, it's lumber. Big mover yet again, up 10.93%. It was number 1 in the other direction last week, off 6.26%. And number 1 to the light side this week, good old Eurodollars, up 10.99%. Number 2 in the other direction last week, up 4.65%. So that's our table setting for this week. Let's do a quick couple of hits out here on some of the big names that are moving this week before we get to our big this year in futures options extravaganza. Since we got WTI at number 4, I know it's a popular one with a lot of you. Let's get out there first. cmegroup.com/TWIFO, listeners, is the place to go to begin your journey to the energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. One final time for 2022. Going to get into the energy, cmegroup.com/TWIFO. Get into that asset class menu, listeners. Then you're going to scroll down from there to energy. It's about number 4 there. Then you're going to go to crude oil and WTI to begin your journey to the dark side. Come into Showtime. We got WTI getting a nice lift, like I said, number 4 to the upside, over back north of the 75 handle now, 76.74. So getting some lift again after energy coming under assault in the wake of the renewed Omicron variant threat out there. In terms of paper this week, pretty light, but again, it is the final week of the year, so seasonally, this is not usually your Rock'em Sock'em Robots week. Only 275,000 contracts on the tape. We can easily see 450, 500,000, if not more, contracts on the tape on a more active week. In terms of where the action was this week, it was in the Feb contract that has 15 days to go. It has about 44% of the paper this week. So that's pretty much where we're going to be hanging our hat, right outside our frame of reference. 15 days ago, expiration is on Jan 14th for this contract here. Let's get on out to the vol. The vol, if you're wondering, out here in WTI this week, 34.71, off nearly 4.4 points on the week. So vol continuing to come in. Makes sense. We've seen a very equities type skew out there in WTI for the lion's share of the year. So you rally, vol comes off, you sell off, vol comes up. And that's pretty much what we've been seeing again this week. Skew-wise, the puts, the overall skew jumping right back into line with what we're seeing in some of the equities out there right now. Last week, the puts were bid 10.4% rich. This week, the puts are really bid 18.7% rich. Is there some concern to the downside? Perhaps a wee bit. Last week, the calls 6.3% cheap. This week, the calls super cheap, 11.7% cheap. So this is starting to resemble the levels we're seeing in some of the equities out there. Not the overall at-the-money vol level. Most equities right now are not at a 35 vol. Now, that puts into stark relief then how expensive some of these puts are in WTI. We're looking at an 18, almost 19% premium on top of that nearly a 35 vol to buy some of these 25 delta puts. So that shows you how expensive it is to hedge out there right now in WTI, which again does reinforce the fact that some of that concern is to the dark side out there this week. But in terms of action, the number one leading candidate for your WTI dollar this week, listeners, was the 80 call going out there in February with 11,000 contracts going up on the tape this week, listeners. The big day is today, just slightly, 35.69, 34.26 on Monday, good chunk of that opening, and 31.32 on Tuesday, good chunk of that closing. So intriguing. Only about 1,000 going up on Wednesday, slightly opening. So mostly opening throughout the week. We obviously don't know what's going up today. Of course, the way those calls got annihilated, good sense to feel that somebody was selling a call or two out there this week. Also, let's see, number two, we have the 70 puts with about 6,700 going up. So quite the jump between number one and number two this week. Only 6,700. The big day for these 70 puts was Monday with 3,200 contracts hitting the tape. A good chunk of that opening, 2,000 on Tuesday, and the rest kind of scattered throughout the week. Number three, right behind the 70 puts were the 85 calls, about 5,700. The big day today, about 2,400, and then 1,600 on Monday, slightly opening there. Let's go look a little bit farther afield. 80 calls, also pretty active in June, 5,700 going up this week for June as well. All of that closing throughout the week. Obviously, we don't know today's paper, but 1,500 going up today, 1,800 on Tuesday, about 1,500 again on Wednesday, and about 900 on Monday. Again, most of the week biased towards closing. So taking some 80 calls off there in June. If that's not far enough out for you or far enough down, we got the double puts, the 55 puts in June of 2023. Going up 1,300 times this week. 800 on Tuesday, 500 today. And Tuesday was opening. Don't know about today, obviously. So intriguing stuff afoot out here in WTI. What are you thinking about WTI at these levels? 76.75 roughly? Are you thinking more downside ahead, more upside? The skew is certainly biased in one direction right now. Are you liking that? Are you using that to maybe leg in to sell in some puts, take advantage of that premium, buy some cheap calls? What are you up to out there in WTI? Hit us up. Let us know as we roll on into some other products before we get into the year in review. Another hot one that's moving this week is the wheat. We hit on it last week, but it's kind of hard to escape it this week. So let's head out there to the ags really quickly next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, time to head out to ags. Go to that drop down, go right to the top. Ags are pretty easy. It is alpha order after all. And then scroll on over to the SRW wheat. A lighter contract than crude oil, obviously. And it's also a light week again. 51,300 contracts on the tape for the old SRW wheat. 780.5. It's where it's hanging out right now, off about 4.25% this week. So it seems like a lot of that sell-off has been pretty much this week. 780.5, like I said, is where we're hanging out. And in terms of where the action was this week, it was once again in that Feb contract. This one has about 22 days to go, expiring on the 21st of January. And 47.4% of the paper, so nearly half going up in that Feb contract. So we're going to hang out there. The vol in Chicago wheat here, 23 and about a quarter, off about 3.25 points this week. So pretty rich. Again, not as lofty as crude oil, and more rich, more lofty than what we're seeing in a lot of the equities out there. So it's kind of a nice middle ground between the two. In terms of skew, the puts last week, 4.7% cheap. This week, 4.2% cheap. So getting bid up a little bit, about half a point. The calls last week, 8.2% rich. This week, 4.2%. So the calls coming in quite a bit out there. Let's see what the action was out here. It was the 850 calls that led the dance this week with nearly 2,000 contracts. The big day today, 1,335. So we have no idea what's going on from an open interest perspective. Today, the rest of the week, mostly closing scattered paper throughout the week. But again, seeing what's going on in the call wing, good sense that maybe someone is selling a call or two. We also saw some 760 puts doing about 1,500 contracts. The big day for those was Monday with about 700 and about 500 on Wednesday. Opening on Monday, not so sure about Wednesday's paper. And then 810 calls right behind it with about 1,350. The big day was Monday with about 1,000 going up there, most of that opening. So Between the 8.10s and the 8.5s, someone's probably hitting a bid or two out there to knock those calls down a little bit. 8.5s also active in March with about 1,500 going up there as well. And we got some other ags. We could do corn. Tell you what, we haven't done corn most of the year, so I know some people out there are big fans of corn. So we'll do a quick stop there as well to keep all the ag heads happy for the year. Then we got to get into our 2021 year in review, listeners. All right, here we go. Corn, again, go to that drop down, back out of wheat, back up into corn. Corn right now, $5.9525, off about 1 3/4% on the week, or about 10.5 handles. And in terms of where the action was, by the way, how much action was there? 295,000 contracts. So even on a light week, corn still does a fair amount of paper. We've seen it do well over 400,000 some weeks out there. So let's look really quickly. March was the most active contract, about 38% of the paper going up out there this week. So we're going to hang our hat out there. The at the money vol in corn, 24.11. So again, kind of a similar range to what we're seeing out there for wheat. Skew wise, the puts last week, 2.6% cheap. This week, nearly 5%, 4.9% cheap. So puts getting cheaper. Calls, 5.9% rich last week, 2.9% rich this week. So puts getting cheaper, calls coming in. Intriguing out there. Let's look to what the action was. And it was the 600 calls. Again, we're at a 5.95 So that's pretty much the at the money strike there. Doing the lion's share of the paper this week, 18,000 contracts on the tape. The big day was Monday, almost 11,000, 10,800 on Monday. Good chunk of that closing, 5,000 on Tuesday, more of that closing on Tuesday, and then about 1,500 today. So a lot of closing paper on the 600 call strike. Maybe some closing sales out there. Either way, calls coming in a little bit with the 600 calls leading the dance. Followed behind that, we have, looks like the 640s doing about 7,000 contracts this week. So quite a drop from number one to number two. And of that 7,000 contracts, nearly 5,000 going up on Monday. So, and the most of that opening, about 3,000 of that opening. So intriguing paper out here in corn, 1,640 going up on Tuesday. The rest of the week, kind of light. Let's look really quickly. Scroll a little bit farther down, see if we have any other interesting action. The 500 puts going up in Dece of next year, 1,300 times this week as well. Again, doing about, looks like about 1,300 contracts out there for the corn. All right. Before we kick out of the products for this week, let's do a real quick pit stop in the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, get to that drop down, back it up out of ag, scroll it down to equities, scroll on over to the Russell 2000. Of course, if we're talking equities, we got to talk vol. Coming into today's show, we had the RBX, so the VIX of the Russell 2000, at about a 23 3/4, down about 2 3/4 points from last week. VIX at about a 16 3/4 when we kicked off the show, down about a little over 1 1/4, about 1.3 points from last week. VVIX at about a 108, almost 109. That's down about 12 points. So VVIX coming in quite a bit, the vol of vol. Vol Q at about a 17 3/4 when we kicked off the show, down about a quarter. And then so that puts that VIX to RBX spread at a little bit wider than 7. That's about almost 1.5 points tighter than it was this time last week, about 1.4 points tighter. And the VIX to Vol Q at about a little over a point tighter than it was this time last week as well. Remember, for a brief period, there was no spread between VIX to Vol Q out there. So intriguing. All right, let's get on out to the equities out there in small caps here. Really quickly, let's do a quick run through of the year for vol, since we're talking equity vol now. VIX started the year really around 27 almost, kicked off the year, topped out for the year at 37, almost 37 and a quarter back in late January, and then never really saw those levels again. You can argue that January was the apex for the year for a lot of things. Kicked off the meme stocks. We had the DC madness going on. We had vol madness going on that month. Never really saw those levels again for the rest of the year. Hit its low of 1507 in the middle of summer in July 2nd of this year. VVIX, similar story, topped out at about 157.69 on January 27th, and then hit a similar level on December 3rd, 156.10 out there, and also hit its low, not in summer, actually in April of 97.09. That was pretty much one of the few days of the year where we were below triple digits from a vol perspective. So that pandemic vol has kept vol frothy throughout the year, and That's reflected in VVIX only really breaking 100 once, pretty much for the entirety of the year. Vol Q trading over there on CME, the at-the-money vol of the NASDAQ, that hit its high for the year, same day, 32.20, as it did with VIX, and it hit its low for the year. Again, a different day than VIX, so kind of weird. VVIX hit its low in April. VIX hit its low in early July. Vol Q hit its low in late August, 14.13 on August 27th. So an interesting disparity there across the vol spectrum. And since we're talking, well, before we get to that, let's break down really quickly our final look, our last look here at Russell 2000 for the year. What a year it has been. The Russell 2000 kicked off the year still with that roaring glow from all the election madness, and then it roared into the year. Then it kind of settled out for a bit. Then we saw a lot of that second half of the year with that later Santa Claus rally that Russell actually called live here on this show. That got its wings clipped very quickly by an aggressive sell-off, pretty much a correction out there in small caps. And now as we're coming into the end of the year, 2267.70 is where small caps are this week, up about almost 31 handles or about 1.4% on the week. A decently active week. Again, it's kind of quiet, a little over 20,000 contracts on the tape out here in the small caps, with almost half of that, 44.5%, going away tomorrow. It's the old equity paper. And the leading contract out here this week, 22 double calls, 1,489 of those going up this week, listeners. All of those going out tomorrow. Let's see if we can find anything else that is a little bit more along the longer term put or small delta call train. Not really seeing any of those. We saw about 500 of the 2115 puts going up out there in the week 3 Jan contract. But other than that, not a heck of a lot going up out here this week in all things small caps, which means, listeners, it is the time you have been waiting for. It is time for our 2021 year in review. All right. Welcome to our 2021 year in review. Let's kick it off in style, listeners. Let's go out to our movers and shakers one final time for the year, but we're going to extend. We're going to set that dial up a little bit farther back this time. Not going to look back a week, not going to look back a month. We're going to look back for the entirety of the year. And because you love it, we're going to extend our movers and shakers for the year, not just a top and bottom 5, but a top and bottom 10. So let's kick it off here. Let's go to the dark side. That's kind of just where I like to hang out first, listeners. That's what you expect from me. I wouldn't want to disappoint you here for the year. And if you're lucky, if you follow us over there on social media or CME, you should have gotten access to this report for yourselves. You can see how pretty strongly biased the year has been to the upside. Does that surprise anybody? I bet you're probably wondering right now, you're probably guessing to yourselves, probably a few names you're bandying about for the top of our upside movers and shakers this year. Maybe you're thinking Bitcoin. Maybe you're thinking lumber. Maybe you're thinking nat gas. Maybe you're thinking a few others. Those are all good guesses. We'll reveal which one is the winner in a little bit. First, to the dark side we go. Number 10, the bottom of our dark side movers for the year. It was the 10-year, off 5.5%. Again, a year when equities mostly rallied. You'd expect to see treasuries taking a bit of a hit. You can argue whether the performance has been what people expected out there in treasury. A lot of people felt a little bit shortchanged by the treasury action this year, but nonetheless, 10-year there, 5.5%, number 10. Appropriately enough, 10-year at number 10 there on our list of the dark side. Number 9, also going 10-year, this time the ultra 10-year, off almost 6.5%, 6.47%. Number 8, we got the old 30-year, 7.63%. Listeners. Number 7, it's the old Euro USD. Haven't seen any FX on this list in quite some time. 7.9% out there to the dark side there. Number 6, back to the curve. In particular, we got the Ultra 30-year off 8.38%. Number 5, to the metals we go. Platinum off 10.1%. So now we're in our actual bottom 5 for the year here, listeners. Number 4, it's the yen. The yen USD. Got some more FX here in our dark side this week. Off 10.36% for the year. We did see the yen pop up a few times on our movers and shakers. We saw Nikkei up there a lot, the yen-denominated Nikkei. Yen USD popped up a few times. Problem is not a lot of volume for us to really sink our teeth into out there. Number 3, remember when this one was supposed to be the next hot short squeeze, the next hot meme name, call it what you will. Yeah, it was silver. And even back then we were saying on the show, silver and futures options don't really play the same way as you do with a heavily shorted thin equity. So silver never really materialized that squeeze. And for the year, it falls at our number 3 spot, off 12.92% for the year. So silver bulls, not exactly got a smile on your face. I know you've been listening to Uncle Mike on any of our shows. He's been talking a bit about silver. He likes his long-term collars out there. Maybe we'll have him on again to talk about restructuring a new collar here for the new year. Number 2, hanging out in the metals yet again, it's palladium. A rough year for palladium, off 17.43%. What could top that to the dark side, listeners? Well, if you said iron ore hanging out in the ferrous metals, then you are the winner chicken dinner, 27.91% for the year, listeners. Again, that's a pretty hefty percentage. I wonder if we can beat that to the upside. So let's find out. To the upside we go, listeners. Number 10, in the light side direction, soybean oil, up 30.61%. Number 9, we've got lumber, 33.59%. Number 8, KC wheat, up 35.68%. Number 7, nat gas, up almost 51%, 50.99. So all of you who had nat gas at the top of your bingo card for the winner for the year, unfortunately, no. Coming in at number 7 this year, listeners. But a good run nonetheless, up nearly 51%. Number 6, we've got Brent. Don't talk about Brent a lot because it doesn't do a ton of paper over there at CME. It's mostly a WTI-focused platform at CME. But Brent, nonetheless, doing 54.21% to the upside. Number 5, our old friend, WTI. Heck of a year, 59.07% to the upside. So maybe some of you had WTI out there on your winner chicken dinner list. It made it into the top 5, so it beat nat gas, but not quite enough to take the top spot, listeners. Number 4, still hanging out in energy. It's heating oil, 60.44% to the upside over the course of this year. What could top that, listeners? I don't know. Let's find. Oh, could it be more energy? Yes. Number 3, it's RBOB, up 62.2%. So let's see. So far, we've already had lumber, 33.59%. Doesn't that seem like a quaint move for the year for lumber coming in at number 9? We've seen lumber move almost that much in a week. So net, it only shook out to about 33.59% to the upside. So number 9 for lumber. Unfortunately, all of you who had lumber at the top of the list, not doing it. Number 7 was nat gas, nearly 51%, also not doing it. Now, WTI, number 5, 59%. What does that leave? Well, there's a couple of things, listeners, as we close in here on the number 2 spot. That means everyone out there who had Bitcoin as your number 1 mover and shaker to the upside for the year. Unfortunately, no. Close. But no cigar, 63.2%. So the number 2 spot, the recent sell-off, obviously hurt it a wee bit out there. Would have been closer to the number 1 spot. Don't think it would have taken it, though, because the number 1 spot, did you have oats on your list? You should have. 96.28% to the upside for oats, taking our light side mover and shaker award here for the year. So just to recap there, number 1 to the light side, oats, up 96.28%. Again, unfortunately, not really a big option product. So we've never really parsed it on the show here. Same deal with lumber. No options to speak of. So can't really talk about that one either. So unfortunately, a lot of the big players, Bitcoin, I wish there was a ton more options paper. If you want to talk about what's going on some other venues, check out our crypto rundown program on Monday. But on CME, it's still been a light options product out there, even though the futures have been doing some decent volume, particularly with the uptake and launch of Bitto recently out there. So of your light side, the big movers, a good chunk of them, not a lot of options paper to parse out there as we keep on looking. And of course, our number 1 mover to the dark side, iron ore, also not really an options player out there. So sometimes we're kind of limited in how much we can sink our teeth into these, but big moves, extreme moves out there nonetheless. And before we wrap up this year in review show, listeners, I want to add a little bit extra for you out there. So we like talking about volatility out there. And we thought, what's a good way to look at the year from a vol perspective? Sometimes it's hard. You have to look at constant maturity and different things. Obviously, contracts are always rolling off the board and expiring. And we thought, you know what? Derek was just on the show. He was talking about a great way to do just that. It's a great product/index. For this exact purpose, it's CVOL. CME is already calculating this. They're going out and taking what is effectively a VIX-like methodology, taking a rolling 30-day look at the implied volatility, factoring in some of the skew as well to the upside and the downside. And they're calculating all these CVOL numbers already. So that's a great way to look back at the year and some of the movers and shakers out there from a vol perspective. So we thought we would do just that to help you wind down the year here, listeners. Let's kick it off in the metals first. Again, you can find all of this for yourself. You don't need any subscription or anything to find this. Just type in CME and CVOL, CVOL, into your browser of choice. We don't judge. If you're a Safari, you're a Sleipnir user, we don't judge. Whatever you want to use out there, type it in and you'll get to these numbers, and you can run them for yourselves for the entire year. It's very easy to do. And you could see, let's start with the metals and we'll kick things off from there. Gold, let's look at the big dog gold first. Coming into showtime, we're seeing, again, precious metals vol kind of hovering at the lower end of the range. Gold vol, from a CVOL perspective, got as low this year as 13.13, got as high as 22.44, and coming into showtime is at a 14.21. So hanging out near the lower end of, not quite there, but pretty darn close. You got a few here that are actually almost pinning the needle here, but not quite gold. Interesting stuff out there in terms of the CVOL. Of course, if you want to dig into it, you can also look at some of the numbers they have there. For skew and everything else, again, we talk about skew a lot here on the show already, but if you want to dig into some of their CVOL skew numbers as well, that's all there for you for the year as well. Copper, another one, an intriguing one here. Coming into showtime, we had copper vol at about a 27.25, also near the lower end of its range. The low end of the range for the year for copper has been 22.09, and the high end of the vol for copper, 41.62. So again, hovering near the low end of that, not quite almost touching it the way gold vol was. Silver, let's see what silver's hanging out at. Silver vol coming into the show was at 26.65. And that actually is the low for the year is 26.65. So that is pinning the needle there from a silver vol low. So again, if you think maybe silver is a bit overdone to the dark side, you want maybe a cheaper time to get some long premium on in silver, according to the CVOL numbers, you could do worse than right now. Silver vol, get this. This gets back to what I was talking about with some of that meme stock frenzy bleeding over into silver. Silver vol got as high as nearly 100. 95.84. You're talking Bitcoin ETH vol levels for silver. Obviously, that was very short-lived, but still, to be pretty much a quarter of that now is interesting. So again, that's something we talked about for a while, especially with precious metals vol. They can spike, but those spikes tend to be short-lived. So intriguing stuff. Just bear that in mind if you're going to be buying premium in any of these metals. You have to take your opportunity to get out of it when the getting's good, because they don't last too long. When the vol pops, not exactly a long-term phenomenon. Witness everyone who maybe bought vol and silver at nearly 100. They're probably regretting that right now. So intriguing stuff. If you haven't checked out the CVOL, I encourage you to do so. The overall metals category, they have an aggregate metals index they disseminate as well, which is kind of interesting. So aggregate metals vol right now, 1502. That's near the low end of its range as well. The metals vol low for the year was 1455, and the high was 2730. So again, overall aggregate metals vol hanging out near the lower end of the range, which makes sense given where we've seen the levels for gold and copper and silver. Let's go out to energy now. Let's see what's going on out there. To our old friend WTI, we just kind of crunched the numbers for you. You can find the actual at-the-money vol level over there on cmegroup.com/TWIFO. CVOL is a little bit of a different story. It's using that methodology to come up with that number, incorporating the skew as well. And the CVOL number for WTI vol right now is at about 39.54. That's bouncing off the lower end of the range, not quite touching it the way that silver was. Silver was the low for the year right now. This is talking about almost 9 points above it. The low for the year was 30.60, and the high, again, WTI can get frothy sometimes. The high was 73.66. So overall, vol level wise, we're definitely near the lower end of the range. Nat gas 81.62 is where the vol is out there right now from a C-vol calculation perspective. The low for the year, get this, listeners, 30.64. Again, nat gas usually a very seasonal product, so I would anticipate some of those lows probably came in that seasonally quiet period. The peak, the high for the year, 143.59. We got pretty frothy out there in nat gas, and we may again, with all this talk of troops massing on the Ukraine border and everything, maybe the end is not yet for all nat gas vol out there. Let's look at heating oil really quickly as well. Heating oil 37.30. The low for the year was 25.22, and the high for the year 64.75. And the overall energy C-vol aggregate indicator coming into showtime was at a 56.21. The low for the year 32.35. So that energy aggregate significantly off the low. It's also a decent way from the high. The high was nearly 88, 87.78. So kind of hanging out right in the middle of that range for the overall energy vol out there. Let's look really quickly, since we're talking a WTI, really quickly. I happen to have it up on my screen here. Let's look at the historical skew really quickly, see what's going on from a skew perspective. The peak skew. So skew is mostly biased to the negative throughout most of the year. It was the least negative on March 25th. It about a -3, -2.92. That was back when WTI was about $60, $60.09. And the low for the skew, when the skew dipped to its most negative, -31.51. That was on December 1st, when the future was 65.37. Let's roll on out to the ags really quickly as well. Soybean oil, one of our top movers and shakers for the year. That had a C-vol of 36.01 coming at the start of the show. The low for the year, 25.41, and the high for the year, 55.57. So hanging out in the lower portion, but closer to the middle than it is to the actual bottom there. Not like silver, not touching the bottom there like silver. Corn, C-vol of 23.83, so substantially lower than soybean oil. The low for the year, 20.84. The high for the year, 56.67. So corn vol much closer to the low for the year than soybean oil. Soybeans themselves, C-vol of 19.39. The low for the year, 16.63, and the high, 43.19. Let's go out. Let's go to Chicago wheat as well. 25.09 is where it's hanging out right now. The low for the year, 23.87. So a little more than a point off the low there for wheat. The high, 44.63. And we want the aggregates overall ag products index. That one is at about a 23.06 when we kicked off the show. The low for the year, 21.18. The high for the year, 46. So again, most of our ags products hanging out near the lower end of the spectrum. Let's head out to rates really quickly as well. Let's go to the 30-year first. Again, that's got a little bit more juice to it than some of the other products we're looking at out here. 87.72 was the C-vol level when we kicked off the show. That's had a range of 62.16 to the dark side and 109.5 pretty much to the upside up there. So that's quite the range, and hanging out at about an 87 right now there. 10-year, 83.36 was where it was hanging out from a C-vol perspective here, kicking off the show. 50.25 was the low for the year, and 122.68 was the high for the year. So also hanging out kind of that low 80s range right now. The 5-year, 81.08 was the level when we kicked off the show. The low for the year, 32 listeners, and the high for the year, 104. So that's a surprising low for the 5-year. So obviously the 5-year hanging out closer to the upper portion of its range. Let's go to the 2-year really quickly as well. 40 and about a half is where it was when we kicked off the show. And the low for the year, 9.34 listeners, and the high for the year, 52.46. So clearly closer to the high than the low out there. The aggregate Treasury C-vol was at about an 82 when we kicked off the show. The low for the year, 49.27, and the high for the year, 115. So hanging out in the middle of that range there as well. Let's look really quickly. Let's go to the overall FX, because they track FX as well. Let's look at the overall FX C-vol. Again, one of the reasons we don't get a chance to feature FX on the show too often is because the aggregate C-vol for FX was a 6.4. Again, not a lot of juice to be found out there. The low for the year, 5.66. The high, 8.4. Again, that kind of summarizes a lot of FX there in a nutshell. They also have some other aggregates they put out, like their commodities aggregate, which kind of jumps product categories and makes a whole basket. That one was at a 40.71 when we kicked off the show. The low for the year, 25.91. and the high for the year, 62.18. That's a good way to leave it, I think, for the year. Looking at the overall aggregate commodities basket and hanging out kind of in the middle of that volatility range. Unfortunately, listeners, we've come to the end of an epic sojourn, an epic year, really, in TWIFO. I want to thank all of you out there for joining us, whether you've been listening to the show for years or for a lot of you I know, discovering the world of options and indeed futures options for the first time this year. Either way, welcome. We appreciate you taking your time out of your week to listen to us talk about all things futures options. This week we had a great legion of guests joining us in the hot seats there this year. I want to thank everyone who took the time really to join us to talk about all the different aspects of the space, metals, ags, rates, all of the above, like guys like Dan and others. It's been a great series of guests rotating through the hot seat. Hopefully you enjoyed your time with us this year, and we'll see you back here again, kicking off an entirely new year next Thursday, another episode of This Week in Futures Options. Have a great new year, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.